Live from the Traders Expo in Las Vegas, Nevada. I'm Adrian Manns. I'm here with an old friend of mine. This is John Person. I've known him for a good 20 years now. Very talented trader. And I would love to know, where do you think we're going moving forward? Are we at tops? Are we going to go out of the year sort of flat? Are we going to make new highs? What's the, no pressure here, but what do you think is going to happen?
No pressure. Well, a couple studies that I look at are not just spreads, but also look at relative strength and different sector rotations that's going on in the market. The S&P's more than likely, the spider should end up maybe, I don't want to be too precise, around 312 or so.
Okay.
I'm giving like a 25 to 26% end of year figure from percent gain for this year. I believe also we're going to see finally the condiment, as I've been calling, I call it a condiment trade, catch up. It would be the Russell. A lot of fund managers all year were prognosticating a recession. The China trade war crisis, which hasn't really developed into a crisis, economic crisis at all. In fact, I think a lot of people have missed the boat on the whole housing boom and lower interest rates and refi and what that's done. And so the ripple effect that we see with consumers, and consumer spending is they're not as stupid as they used to be. They're still very savvy at where they spend their money and on what. So I'm believing that we are going to see, if we can get energy to stabilize, which we are. 57 on average price for crude oil is very good for this time of year, number one. Number two, regional banks are picking up in a big way, and so that trade's coming back, and those two sectors weigh heavily on the Russell. So if everyone was thinking we were going to be in a recession, no growth, don't buy Russell. But if that trade thinking unwinds, then we're coming into probably the best time of the year also for the Russell. It's called the January effect. So the Russell, the IWM, could play catch up, and I'm thinking 22, 24%, let's call it, by year's end.
And the China crisis, if you want to call that a crisis, seems to be as much a function of the 24-hour news cycle as anything else, right? It's a really good talking point, but I get the feeling every day it's either it's all solved, or it's all never going to be solved, or it's all solved, or it's all never going to be solved, and I haven't found anything I could really key off of outside of opening volatility there.
Yeah, well, I think as a trader yourself, Adrian, and I think most of the people watching do know your past in stocks.
Yeah.
What I could tell you is that we, as traders, we all know that the headline news, whether it's the financial news media or the mainstream media networks, they're one single agenda, and I think most people should know, probably are aware of this. I mean, there's not any day or any minute, and I think the agenda is to put everything negative about the current president. So there's no talk about what policies, what executive orders, trade deals, or any of that are really in. And I polled some neighbors, and I asked them, I said, so what do you think positive has happened over the last, and no one could say anything. They said, did you know about the $55 billion trade deal with Japan? No, didn't know about that. I mean, these are kind of some amazing things. So again, I think the news, we are subjected to the headline news affecting the market immediately, and we see a lot of shakeouts that's what it is. And to me, this since August, it almost, I have the opinion, it's as if the market is trying to shake people out of their stock positions, believe it or not, because there could be a shortage of stock. If everyone has a job and people are participating to 401k, and if we continue with a low interest rate environment, not domestically, but globally, there's not going to be a lot of places to get better rate of return on capital than still in equities. That doesn't mean to say we can't see rotations from people getting out of REITs and utilities and staples, but I believe that as we move forward, there could be a bigger boom coming in equities, and no one's talking about a potential melt up relative to a meltdown. Everyone's pessimistic.
Now, you've developed a bunch of great software over the years that we've talked about, and you've shown me the way that it functions. Is there anything you're leaning on at personsplanet.com more heavily than you have in the past? Is there something that's sort of forward?
Yeah,
right now?
I would have to tell you that the one main tool that has really kept me on my finger on the pulse this year has absolutely been cumulative breadth of the market and all the top stock indices. So I look at not just the NYSE, which no one's trading, it's an index, right?
Right.
65% of that stock index is interest rate sensitive. A fifth of the stocks, if I'm not mistaken, are even foreign corporations that we don't trade. With the Dow being 30 top stocks, the Russell, the NASDAQ Composite, and the S&Ps, we've seen a big rotation of sectors that weigh in on those different indexes. With the NASDAQ 100, even though it's 102 stocks,
right,
and the S&P 500, which is actually 503 stocks, the interesting component is that everyone thinks that NASDAQ 100 is technology weighted. It is, but it has Costco, it has American Airlines, it has Biogen and biotech. So there are a lot of different stocks in the NASDAQ 100, not just Facebook and Apple.
Right.
Two other stocks that I have been a big fan of watching for to see the overall global health of the market or global economy is Illinois Toolworks. That's one of my go-to.
ITW.
ITW, right. I mean, as go ITW, if they're not doing well, then we got some problems in industrial chemicals and manufacturing and auto parts. I mean, what they make is phenomenal, right?
Right.
With that stock breaking out near, 170 and change, I think, I don't know where it is this precise second, but it definitely, not just besides Apple having its breakout, but I think some of the industrials and everyone focuses on like Caterpillar, there's other stocks we need to focus on. So looking at the breadth of the market, number one is very important as it breaks down to the different top stock indices. That's been probably the number one. Number two, for individual stocks, is the PMC. It's a relative strength indicator that I created that can be found on multiple platforms.
All right. Well, that's great stuff.
Thank you,
so
Adrian.
we're going to be back in a minute with more with John Person. You can check out personsplanet.com if you want to see some of these indicators and software packages that he's developed in his very successful trading career. For the Traders Expo, live from Las Vegas, Nevada, I'm Adrian Mans.